Hello friends, welcome to my channel. In this video we will cover tedious questions of a study material. So let's start with first question. So LL Limited paid leave travel facility to its employee and considered exemption under section 10(5). So this is the case of section 192, right? That is tedious on salary. And in case of tedious of salary, employee has to submit evidence of such deduction, exemption or losses, and employer shall not consider losses except house property losses, right? So here the most important word is the self declaration. It means employee has furnished self declaration. That is not enough, because employer should consider evidences or proof of payment like invoices or bank statement, any such proof of payment for claiming deduction or exemption. Next, the assessing officer held that the company ought to have been verified the genuineness of the claim, that's correct, by obtaining from them the proof of actual expenditure, either invoice or bank statement, anything. But here the employer has obtained only self declaration, and that is not enough. So assessing officer treated the assessee company as a assessee in default, and we have to determine the correctness of action. So here assessing officer is correct, right? Because employer should obtain evidence or proof of such payment. Self declaration is not enough. Next, let's read the answer. Section 192 casts liability on the employer to deduct tax from salary paid to its employees, right? In this case the employer has paid leave travel concession, but the exemption is available only on expenditure actually incurred, okay? And that too, employee has to submit the evidence of proof of particulars of prescribed claims. Any type of deduction or exemption employee is claiming, so he has to submit that evidence and proof to the employer, right? So that he can estimate the income of the assessee and compute the total TDS deductible, right? And in the given case, LL Limited paid leave travel concession to its employees and considering exemption on the basis of mere self declaration. And this is the most important word, because self declaration is not enough. Employer has to consider all the evidences and proof. So assessing officer's action of assessing officer is correct in law, right? Next is illustration 2. Mr. Sharma, an employee of Messrs ABC Limited since 10th April 2018, right? Dates are important in this case, and resigned on 31st March 2022 and withdrew rupees 60,000 from the balance in his EPF account. So 192A will be applicable in this case, right? 192A will be applicable, and in case of 192A, TDS will be deducted only at the time of payment, and no need to deduct TDS if aggregate amount of payment is less than 50,000. So here the amount is 60,000, right, which is not less than 50,000, so TDS sections will be applicable. And if employee does not furnish his PAN, TDS should be deducted at maximum marginal rate. But in this case we are assuming that employee has furnished his PAN to the employer, okay? But we have to check one more thing, that whether the period of 5 years is served by Mr. Sharma or not, because if 5 years period is served by Mr. Sharma, then no TDS will be applicable, because this is exempt, okay? So 2018, so 2019, 2020, 2021, 2022, approx 4 years, right? So 5 years service is not served by Mr. Sharma, so this amount will not be exempt. So TDS will be applicable on 60,000 at the rate of 10%, that is 6,000. So 54,000 will be paid to Mr. Sharma after deducting TDS. And you can read the answer. As it is a revision video, I am not going in that much detail. You can read, same things are written here. You can see the net amount receivable by Mr. Sharma is 54,000, that is 60,000 amount withdrawn minus TDS at the rate of 10%, as amount is 50,000 or more, and it is not exempt in the hands of Mr. Sharma, as he is he has not served for the period of 5 years, right? So TDS will be applicable at the rate of 10%, that is 6,000. Next is illustration 3. So there are multiple cases in illustration 3. Let's discuss the first point of the illustration 3. So on 1st October 2021, here also date is important as we have to calculate the interest, right? So 1st October 2021, Mr. Harish, aged 45 years. Age is also important as it is a case of 194A, right? In case of 194A, whenever interest is paid by a bank or cooperative bank or post office on any time deposit or recurring deposit up to 40,000, then there is no TDS. But in case of a resident senior citizen, then 50,000 will be the threshold limit. So in this case, Mr. Harish is 45 years old, then 40,000 will be the threshold limit in case of payment by bank, post office or cooperative bank. So made a 6-month FD on 10 lakh at 9% per annum, right? But he has deposited on 1st October 2021, so 6-month interest will be calculated. So 10 lakh into 9% divided by 2. Okay, so 45,000 is the interest, and it matures on 31st March 2022. So we have calculated the total amount of interest is 45,000. So as it is exceeding the 40,000, right, there is a threshold limit of 40,000. After that, TDS will be applicable on the whole amount. So in this case, 45,000 is the interest, so we have to deduct the TDS of 10%, that is 4,500, and balance amount will be paid to Mr. Harish. So 45,000 minus 4,500, right? So 40,500 will be the interest after deducting TDS. So let's read the answer. ABC Cooperative Bank has to deduct TDS at 10%. So 4,500 will be the TDS in 194A. Next is point 2. On 1st June 2021, Mr. Ganesh, age 35 years. Age is important. So age 35 years, so threshold limit will be 40,000, right? So 40,000 is the threshold limit. If interest is up to 40,000, then there is no need to deduct TDS for the bank, and if the interest amount is more than 40,000, then TDS will be deducted by bank on the whole amount. Okay, so here Mr. Ganesh has made 3 9-month deposits of 3 lakh each, and in different branches. Okay, so here is the question, whether bank has to deduct on the branch basis or on the bank basis. So here the answer is bank has to deduct on the bank basis, as the branch is of the same bank, that is XYZ bank, right? So here the interest will be calculated on bank basis. Like for XYZ bank, how many deposits? 3 deposits of 3 lakh each, right? And interest will be 9% of 9 months. So how much the total interest? 3 lakh into 3 into 9% into 9 divided by 12. So total interest will be 60,750. As it is more than 40,000, so TDS will be deducted at the rate of 10%. So how much TDS will be deducted? 6075. Okay, 6075 will be the TDS deducted by the bank. Next, on 1st October, Mr. Rajesh, age 40 years. So here also limit is 40,000. Started a 6-month recurring deposit of 2 lakh per month at the rate of 8%. So here I am assuming you know how to calculate the interest on recurring deposit. If you don't know, you can just search on the Google the formula, right, to calculate the interest on recurring deposit. in case it is not given in the question. Here also it is not given in the question, so I am assuming you can easily calculate that, right? So how much the interest is 28,000, that is less than 40,000, so there is no need to deduct TDS. Okay, such interest does not exceed the threshold limit of 40,000, so there is no need to deduct TDS in section 194A. Next is illustration 4. Maya Bank credited 73,50,000 towards interest on the deposits in a separate account for macro monitoring purpose by CBS software. So here we have already know that in case of a bank following CBS software, no TDS should be made on interest which is credited to a provision account. So here it is a provision account, right? It is just a provision account on a daily or monthly basis only for the purpose of macro monitoring by a CBS software. Since no actual amount is not credited to the depositor's account, right? This amount is credited to a provisioning account on a daily or monthly basis for the purpose of macro monitoring. It is not credited to the depositor's account. Okay, thus TDS is to be made at the time of actual credit given to the depositor. So here the amount is, though amount is exceeded the limit of 40,000, but there is no TDS required to be deducted. So here the assessing officer disallowed 30%, which is absolutely wrong, because the amount is not actually deposited in the depositor's account, right? It is just credited to the provision account for the macro monitoring purpose. So you can read this. So since no constructive credit to the depositor's account take place, so no TDS is required to be deducted, and the assessing officer disallowing interest expenditure credited to a separate account is not valid. Okay, next is illustration 5, that is 194B, lottery winnings, right? So Mr. Govind won the prize of a lottery ticket, and the prize was a Maruti car worth 5 lakh. If it is not Maruti car, it is just a cash. If it is just a cash, then 5 lakh into 30%, that is 1,50,000 TDS will be deducted, and the balance cash will be credited to the Mr. Govind's account, right? But in this case, price was a Maruti car, that is the price is in kind. So here the company which is giving the Maruti car as a prize, it has to ensure that Mr. Govind has paid tax of 1,50,000 to the government, right? Or Mr. Govind has paid 1,50,000 to the lottery company, and lottery company will deposit it 1,50,000 to the government. Okay, either case. So lottery company has to ensure whether the tax has been paid to the government or not. If tax is paid to the government, then he can give Maruti car to the Mr. Govind. Okay, so you can read, in case of 194B, provides that a person responsible has to deduct the TDS at the rate of 30% in case winning exceed 10,000, and in case such price is in kind, then the company has to ensure whether the tax has been paid on such winnings or not, right? Here's the case law too, you can read. So in this case, 1,50,000 will be paid by Mr. Govind before the car is released. Okay, and this can be done by collecting 1,50,000 from the Govind and paid to the government, or ensuring that Mr. Govind has paid 1,50,000 to the government. Okay, either case, after that car can be released, right? Next is illustration 6, that is ABC Limited has made the following payment to Mr. X, a contractor, and whenever there is a case of 194C, that is contract, right? C for contract, we have to check whether the contractor is an individual or HUF or other than individual HUF, right? So here the contractor is individual, so we have to deduct tax at the rate of 1%, and in case of other than individual HUF, tax will be deducted at 2%. So here tax will be deducted at 1% only in case the aggregate amount of contract is more than 1 lakh in a particular financial year, or individual single contract is more than 30,000, right? So in this case 20,000, no need to deduct TDS, 25,000, no need to deduct TDS, 28,000, no need, right? But on 1st March 2022 the payment of 30,000 is due, right? So total we can say 20,000 plus 25,000, 45,000 plus 28,000, 73,000, right? Up to 1st December only 73,000 is the aggregate amount of contracts, but on 1st March 2022 a payment of 30,000 is due, right? So if we add 30,000 to 73,000, then the amount will be 1,03,000, and 1,03,000 is more than 1 lakh. So TDS is required to be deducted at the rate of 1% on the whole amount. And why 1%? Because Mr. X is an individual, so 1% will be deducted on the whole amount. So 1%, 1030 will be deducted. Okay, so let's read the question. In this case the individual contract payment made does not exceed 30,000. It's right, individual payment is not exceeding 30,000, even this is not exceeding 30,000, but since the aggregate amount paid is exceeded 1 lakh, right? 1,03,000. So total tax to be deducted is 1,03,000 into 1%. So 30,000 minus, because 20,000, 28,000 these are already paid, right? 30,000 is due, so whenever, so 30,000 minus 1030, 28,970 has to be paid to Mr. X. Next again is a very simple question. So Bharti Cement Limited, BC Limited, purchased the jute bags from Rajkumar Limited. Okay, so Rajkumar Limited, but in this case I can explain it in very simple way. So there is a jute bags on which logo is printed, right, and it will supply to Bharti Cement, but the raw material is purchased by other suppliers. Okay, raw material is purchased by Rajkumar is from other suppliers. So this is not the case of 194C, because the raw material is not supplied by Bharti Cements, but in case the raw material is supplied by Bharti Cements, and RK Limited is just processing and printing the logo on it and again supplied to Bharti Cement. In this case is the case of 194C. But if you read, the most important line is this: the assessee has not sold any material to Raj and Company, and the latter has to manufacture the jute bags by purchasing the raw material from the outsiders. Okay, suppose let's say I am the Raj and Company and I am purchasing the raw material from outside and processing on jute bags and printing logos and then supplying to the Bharti Cement. So this is the case of sale. This is not a contract, right? This is the case of sale. So there is no TDS will be applicable on this, right? So you can read. The problem clearly states that Rajkumar has to manufacture jute bags using the raw material purchased from other suppliers. Okay, if raw material is purchased from the Bharti Cements, then there is a case of contract. But in this case, Raj and Company purchased raw material from other suppliers. Okay, so there is no point of 194C. Next is illustration 8. So as we already know, we have to consider what type of contractor, whether it is an individual HUF or whether it is a company. So Alap Limited has made the following payments to Vilambit Limited, and Vilambit Limited is a company, so TDS rate will be 2%, right? In case if it is a individual or HUF, then TDS will be 1%, but in this case TDS will be 2%, right? And threshold limits are all same. Individual 30,000, aggregate 1 lakh, right? So contract 1 20,000, contract 2 15,000, 3 25,000, 4 25,000, 5 17,000. So here after adding 75,000, total contract will be 1,02,000, that is exceeded 1 lakh, right? So 2% will be the amount of TDS which is required to be deducted. So 2%. So 2040 will be deducted, right? So whenever he made the payment of 17,000, 2040 will be deducted, and out of 17,000, 14,960 only will be credited to the company's account, right? So here you can see Alap Limited's contention is not correct. Tax is required to be deducted, right, on the whole amount 1,02,000 from the payment of 17,000, and we have already calculated 14,960 will be paid out of 17,000, and balance will be required to be deducted as a TDS. And next part of the question is, what would be the position if the value of the contract is 14,000 only and there was no further contract during the year? So in case this 17,000 is 14,000, right? This is what questions want us to say. 14,000, so 20,000 plus 15,000 plus 25,000 plus 25,000 and 14,000. So only if you calculate all, it's 99,000 only, right? So it is not exceeding 1 lakh, right? So no TDS is required to be deducted, and also there is no single contract which is exceeding 30,000, so no TDS is required to be deducted. Simple. Next is illustration 9. Examine the applicability of the provisions of TDS under section 194 DA. Okay, DA means life insurance, right? So whenever we get the maturity proceeds of the life insurance, then TDS is required to be deducted if the maturity is not exempt. Okay, so here we should have the knowledge of those timelines, right? On or after 1st April 2012, right? On or after 1st April 2012, 10% of the sum assured. If annual premium is 10% of the up to the 10% of the sum assured, then maturity proceeds will be exempt. And before, it means up to 31st March 2012, 20%. If the annual premium is up to 20% of the sum assured, then also the amount is exempt. Okay, so these time limits I am assuming you already know, right? So let's start the first part. So Mr. X, a resident, is due to receive 4,50,000 on 31st March 2022 towards maturity proceeds of LIC policy taken on 1st April 2019. So here the dates are very important because of that 10% and 20%, right? And 1st April 2019 is on or after 1st April 2012, right? So 10% will be the limit. 10% of the sum assured. What is the sum assured? 4 lakh. So 4 lakh into 10%, 40,000, right? So annual premium is more than 10% the sum assured, then it is not exempt, TDS will be applicable on the maturity proceeds. Okay, so 40,000, if the annual premium is up to 40,000, then no TDS will be applicable, right? So here TDS will be applicable, and on what amount? Only on the amount excess of the premium paid. So Mr. X is due to receive 4,50,000, and how much premium is paid by Mr. X? So annual premium is 1,25,000 and policy is taken on 1st April 2019, right? So 1st April 2019, 1st April 2020 plus 1st April 2021 and 1st April 2022, no premium because policy is matured on 31st March 2022. So total premium paid by Mr. X is 3,75,000. How? 1,25,000 into 3. Okay, so 3,75,000 is the total annual premium paid. And how much the proceeds? 4,50,000. So 4,50,000 minus 3,75,000. So 75,000 into, what is the rate of TDS? 10%. Sorry, 5%, right? So 75,000 into 5% will be the TDS that is required to be deducted, 3,750. Okay, so 3,750 will be the TDS. They have not calculated, but on 75,000, 5% TDS, right? Next part of the question is Mr. Y, resident, due to receive 3,95,000 on a LIC policy taken on 31st March 2012. That is before 1st April 2012. So 20% is the limit, 20% of the sum assured. So what is the sum assured? 3,50,000. So 3,50,000 into 20%, 70,000, and the annual premium is 30,100. So it is eligible for exemption and no TDS is required to be deducted. Second, since the annual premium is less than 20% of the sum assured policy taken before 1st April 2012, the sum of 3,95,000 due would be exempt, right? 10(10)(d) में exempt होगा and no TDS is required to be deducted under 194D. And the last part is Mr. Z, a resident, is due to receive 95,000 on 1st August 2021, and maturity proceeds on the policy is taken on 1st August 2015, that is on or after 1st April 2012. So limit will be 10% of the sum assured. What is the sum assured? 90,000. So 10% of the sum assured, 9,000, and the annual premium is 10,000. So it is exceeding the 10% of sum assured. So it will be taxable. It is not exempt under 10(10)(d), right? So how much policy is taken on 1st August 2015? So 10,000. 2016, 2017, 2018, 2019, 2020 and 2021, right? Because on this date it has matured. So 2021. So 70,000 is the annual premium paid. And what is the maturity proceeds? 95,000. So 95,000 is the maturity proceeds and 70,000 is the annual premium paid. So minus 95, 25,000 into 5%, 1,250 is the TDS that is required to be deducted. Okay, they have not calculated, but okay. Okay, sorry, one more thing. Right. As the amount is less than 1 lakh, there is no, it will be exempt. Okay, and it is written in 1010D section that if the amount is less than amount of maturity proceed, okay, if the amount of maturity proceed is less than 1 lakh, it will be exempt. There is no need to required to deduct TDS on that, right? It is 95,000 which is less than 1 lakh, then it no TDS will be applicable. Okay, no TDS will be applicable on that. I have forgotten that part. Next is illustration 10. Calculate the amount of tax required to be deducted on payment made to Ricky Ponting, which is the Australian cricketer non-resident in India, by a newspaper for contribution in articles. Okay, so whenever a person paid an amount to a non-resident sportsman who is not a citizen of India by way of participation in any game or sports in India, advertisement, or any contribution in articles, newspapers, magazines, journals to a game or sports in India, right, then TDS is required to be deducted without any threshold limit at the rate of 20% plus 4% health and education cess. Because whenever we pay any amount to a non-resident and TDS sections are applicable, then we have to add health and education cess too. Okay, so here the rate is 20% plus 4% is health and education cess. So 25,000 is paid to the non-resident sports person who is not a citizen of India, right? So 25,000 into 20.8%. okay, so 5200 will be the tax that is required to be deducted. Okay, so 5200 will be TDS. Next is illustration 11. B Airways Limited sold tickets to a travel agent in India at a minimum fixed price. So minimum price is fixed, and agents are permitted to sell the tickets at a higher price but not exceeding the maximum published price. So maximum price is also fixed. So commission at the rate of 9% on the minimum price. Okay, so TDS is to be deducted on the commission which is based on minimum price decided, right? So whatever the minimum price into 9%, TDS is deducted on this particular amount by the airlines. But assessing officer contended that the liability of TDS is attracted on the difference between the minimum price and the maximum price published by treating it as a additional special commission. So by this you can easily refer the case of Qatar Airways. In that case, Assassi Airline Company sold tickets to the agent at a price below the market price quoted in tickets. However, the agents were allowed to set the price of the ticket up to the maximum retail price, that is MRP, right? And it was held that same cannot be treated as an additional commission, as airline companies was not aware about the exact price. And same in this case, the airline company is not aware about the exact price on which the agent sell the tickets to the customers, right? So the facts of this case is similar to Qatar Airways case law, right? So in this you can easily conclude, you can read all the paragraph and you can conclude that it would be impracticable and unreasonable to expect the airline to get the feedback from the numerous agents about the exact price on which they have sold those tickets to the customers, right? So in this case the contention of assessing officer is not tenable in law, and you can quote the case law of Qatar Airways, right? This CIT versus Qatar Airways 2011. You can put the facts of this case law because these are similar, right? Next is illustration 12. Moon TV, a television channel, made payment of 50 lakh to a production house for a production of program for telecasting as per the specification given by the channel, and the copyright of the program is also transferred to Moon Limited. Would such payment be liable to tax deduction at source Also examine whether the provision of TDS would be attractive if the payment is made by Moon TV for acquisition of telecasting rights of the content already produced by the production house. So here you can easily see in this. First let's talk about this case. Moon TV, a television channel, has made the payment of 50 lakh and for the production of program as per the specification. This is the most important, as per the specification given by the channel. So they have provided all the specification and asked them to produce a program on the basis of the specification given by them. So this is the case of 194C. This first is the case of 194C, as they have produced the program on the basis of the specification provided by them, right? But in this second case, they have just acquired the telecasting rights and the content is already produced by the production house. Okay, so the content is already made by the production house. So this is not the case of 194C. So TDS will not be attracted in this case, but TDS will be attracted in this case. Okay, so you can just read. In this case, since the program is produced by the production house as per the specification given by Moon TV and the copyright is transferred, so this is within the definition of work under 194C. So the payment made by would be subjected to TDS 194C. And is in the next case, there is no need to deduct TDS as the program is already produced by the production house, right? Next is illustration 13. ABC Limited took on sublease a building from J, an individual, with effect from 1st September 2021 on a rent 25,000 per month. So how many months? 9, 10, 11, 12, 1, 2, 3, right? So total 7 months into 25,000, and you can see here it is given 1,75,000 rent on building, right? And TDS rate on building is 10%. Next is it also took on hire machinery from J with effect from 1st October 2021 on hire charges of 15,000 per month. Okay, and the individual is same J, right? But it is a machine. So 15,000, and from October, so October, November, December, January, February, March, so 6 months into 6, 90,000, and this is also given 90,000, and TDS will be 2% on plant and machinery, right? Because on building TDS rate is 10% and on plant and machinery rate is 2%. But we have applied on an individual basis TDS rate, but the threshold limit, that is 2,40,000, is applied on an aggregate basis. Okay, because if we apply threshold limit on an individual basis, there is no need to deduct TDS, but we can't apply on individual basis, right? We have to apply on an aggregate basis on plant and machinery and building. Okay, both. So 1,75,000 plus 90,000, 2,65,000, which is more than 2,40,000, right? So TDS is required to be deducted 10% on 1,75,000 and 2% on 90,000. So on 1,75,000, 10%, sorry, 1,75,000 into 10% memory plus, and 90,000 into 2% memory plus. So total 19,300 is the TDS that is required to be deducted. So here, as per section 194I dealing with TDS on rent, TDS rate 2% on machinery, 10% on building, the scope of tax is required to be deducted on payment by whatever name called, lease, sublease, tenancy, hire charges, by whatever name called. Okay, irrespective of whether such asset is owned by the assessee, owned or not by the payee. So total it is given. They have not calculated the TDS amount, but if you calculate 1,75,000, 10% and 2% on 90,000, TDS amount will be 19,300. Okay, so this is the total TDS which is required to be deducted.